Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, August 1st, 2025. The market sold off a little bit here this week, down 4% for the Russell 2000, which is now again down year to date. People keep looking for the Russell to lead, and it's just not happening. Stick with where the leadership is. But anyways, we lost ground pretty much across the board. Bonds gained some ground, as did oil. Crypto got hit. Let's take a look at these charts and make some sense of it. I always forget to talk about crypto if I don't talk about that first, so let's do that. Let's start out with Bitcoin. We saw a deeper pullback. We made a lower low here. I did buy some last night at around 115 or so, and I am now long about 65% in my crypto account between Bitcoin, XRP, which I purchased at 295, and Solana, which I purchased at 168. I'm not expecting much further downside for these. It doesn't mean it can't happen, but to me, it looks like Bitcoin, if it continues down, maybe into the 111, 112 area. But Ethereum is likely to correct a little bit more. This one's been too strong, really. So it's about time it pulled back a little bit. But Ripple really is looking good here. It pulled back down to the anchor from the April 7th low. So I'm sorry, that's the June low right there. Anyways, it's getting a little bit of a bounce. Let's focus on equities here. We spoke last week about the importance of the 20-day moving average and how we had been holding above it for a long period of time. And that so many leading stocks were doing that as well, that when we broke the 20-day moving average, it might lead to some more aggressive selling. Well, yesterday we closed below the declining 5-day moving average in these markets. And as I mentioned to subscribers, it doesn't mean we get bearish because we still had a rising 20-day moving average, but today's gap lower certainly changed a lot of things. The reason we use stops in trading is for days like this and for, in case it continues to bleed off. When we look at the daily time frame over here, it seems likely to me that we're about to head down towards that 50-day moving average to test that in at about 612. Doesn't mean I'm expecting that to be any kind of bottom. We can take a look at the Fibonacci off of the low to the high, and you can see that just a 38.2% retracement brings us down to the anchor from the April 7th low, as well as that solid blue year-to-date anchored VWAP. Now, I'm not expecting that anytime soon. I'm merely pointing out that this is a very mild pullback so far. I'm not one to buy the dip or encourage others to do so. This is an important level at 618, just a horizontal level of what has been support here recently. So, perhaps we come down, undercut that slightly, then we would make a bounce that would sucker people back in before a decline down towards that 615 level in the 50-day moving average. So that seems most likely to me for next week, is that we do end up hitting that 50-day moving average, but it's likely to sucker people in before we do that. So be careful about buying the dip. As I always say, you don't buy the dip, you buy strength after the dip. And that's going to take a little bit of time next week for the market to reveal that to us. The NASDAQ did undercut that 20-day moving average and closed below it. Now, the thing here is, too, that because the 20-day moving average is kind of flat, if we get a rally, it has the potential to hold as resistance now, too. So that adds a little bit further danger, in my mind, to this market for the NASDAQ. So same story is that we can take a look at the anchor off of this low, and that ties the 50-day moving average as well. It seems highly likely that we will see a test down near about 542-ish for the NASDAQ next week. Russell 2000, I've been calling these things a waste of time. They're underperformers. They're down year to date. I'm not even interested in looking at their chart because it's just been a choppy mess. We had a decent rally in here that you could have taken advantage of, but there has been so much better opportunity throughout other areas of the market that they've just been something that I haven't taken seriously all year. Semiconductors, for the first time since they reclaimed that 20-day moving average in mid-May, April rather, closed below it. So that's a significant closing event. Closing below the 20-day moving average. Now, we came down to this band of what has been support, and like we often see, when the market expends too much energy getting down, when it breaks below there, late to the party short sellers get involved, or it undercuts and hits stops. So maybe on Monday we see a rally up, towards that 20-day moving average, and then a resumption of selling that would lead us down towards that 50-day moving average to start out. We could also take a look at the anchor off of this low, which there again we see the 50-day moving average. So it seems likely that the 50-day moving averages will come into play next week. Ideally, we get a bounce first. For me, that means it would likely become a short sale opportunity, not on strength, but let's say right here. After it shows some strength and starts to break down, we want to sell short that weakness with a stop, let's say above this high, if that's what the high end, the lower high ends up being. Biotech's gained a little bit of ground today, but they remain a complete waste of time as well. They have been between the 20 and the 200-day moving average for the last couple weeks, and here's that range. We can see we undercut it slightly, suckered some short sellers in. It's probably, if it's going to decline, it's going to do it more like this. But it's interesting to see. We did touch the 50-day moving average for the biotechs. To me, it doesn't make them a buy. They also, I think, are a complete waste of time in here. Of course, there's always going to be an individual biotech stock that will have a good stock chart that is worth buying, or a crappy chart that's worth selling short. But we've got the 50-day moving average in the year-to-date anchor right down here. So if I was looking to short this, I think again there's better opportunities probably in the NASDAQ or the semis after a bounce. So that's the way I'm looking. Is ideally we get a bounce that rolls over, and if it rolls over, then there's a short sale opportunity. And again, it's against the primary trend. The 50-day moving average is still heading higher, but if we could short it at 287 with the idea that it might drop down to 270-ish, that's a really nice trade and one worth considering. As mentioned, bonds were stronger this week. They're right up against the year-to-date anchor once again. They still have a declining 200-day moving average, but we've seen a nice little rally in here recently. This could count as a higher low and more repeated test of this level. Perhaps we move a little bit higher, but you look at the weekly chart of the bonds. Let's do that. We still just see a giant mess. If they didn't scare you out on the way down, they're still in the wear you out process, and people getting excited about every little blip up to the 200-day moving average and then getting stuffed is typically the way it happens. Look at the last couple of approaches at the 200-day moving average. We saw that people got excited. Hey, it closed above the 200-day moving average. Let's get involved. Bad idea. When the 200-day moving average is declining, I still consider it guilty till proven innocent. So maybe it breaks above here and even runs all the way to the anchor from the high. Then we have to take it step by step. But for now, I don't see anything compelling there. Leading stocks, Apple. It's not a leader. It's a big cap stock, but it's right down to the anchor from the April 7th low. It remains a waste of time as well. Amazon, it broke its 20-day moving average. It undercut its 50-day moving average. Don't buy the dip to the 50-day moving average. Don't buy the dip to anything. Wait for strength after the dip. SMCI failed right near its anchor from the all-time high, and I think it's likely it's going to find some further profit taking. Tesla continues to trade, somewhat within this triangle that we've observed, and you could say it fell out of that, but there's no structure here. There's nothing worth. You can't look at this and say, hey, I want to buy it. If you were to buy it, you would want to buy it above here, but it would be extended, so maybe it would rally up there and then go. That's highly unlikely. The good news is we're holding on the anchor from the April 7th low, but the bad news is we're below declining 5-day moving average. To me, that says avoid the stock. NVIDIA still above its rising 20-day moving average. Let's see if that can hold. Palantir also continues to be a leader, holding its 20-day moving average. Meta, of course, had earnings this week. They gapped way up, and they sold into that strength, which, I mean, it ran from 480 to 780, 75%ish, and then breaks out on big news. I'm not saying the rally is over in Meta by any means, but it's going to need to settle down, and you'll have a much better opportunity still to buy the stock at a lower price. Microsoft probably needs to settle down as well. The opening print was basically it. People who buy those so-called breakout, I can't believe they find buyers for a stock like this up there after it just rallied from 340 to 560. It just doesn't make any sense to be a buyer after that type of rally. So Same, similar to Meta, you're going to see a better opportunity to buy this. And maybe it does something like this, pulls back to the 50 and spends some time correcting before it's ready to get going again. AMD still well above the 20-day moving average. Coinbase, of course, when Bitcoin breaks down, that's going to break down as well. I don't trade Coinbase. I don't see the reason to. If you've got a crypto account, there's no reason to trade those types of things. Google still holding its 20-day moving average. So this is where we're seeing some relative strength. Perhaps it will show us some leadership next week. But for now, when stocks are below declining 5-day moving averages, it's time to start planning the possibility of trades if they hold 20 and 50-day moving uh, average levels. But don't buy the dip while we're below declining 5-day moving average because it might turn into something worse. Have a good weekend.